Project M-Bridge is a cross-border digital payment system that I've been talking about for over a year. The cross-border payment system sidesteps the SWIFT. It allows these countries to trade their local currencies with one another outside of the purview of the SWIFT. The inability, in fact, it even says, if you go to the BIS webpage, and the BIS is backing the development of the Project M-Bridge, along with China, Hong Kong, Thailand, and United Arab Emirates. You go to the webpage, to the white paper on the BIS website, and it right away says it will prohibit the ability of a unipolar set of sanctions, a country's ability to sanction for whatever reason, the way that we have with the dollar. And you can see how this is all developing, but the unit is something that is very, 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 very interesting. And the unit, according to Dilma Rousseff, which was agreed in principle, and they said we will have a special meeting in September in China to more or less discuss the unit with intentions of rolling it out at the big meeting in October. The unit will be a basket of 40% gold. Now, before I move forward, the BIS is behind this, right? Bank of International Settlements, the most powerful bank in the world. In 2017, we had been in 6 years worth of a downdrafting gold market. About 3 years earlier, the Bundesbank told the United States, give us back our gold, and we didn't really do it. But by 2017, they made a really big stink about it. Followed by, a few weeks later, the Bank of Austria, Hungary, Turkey, Poland, Czechoslovakia, the Dutch National Bank. All of these banks said, give us back our gold, just like you're doing for the Bundesbank. Those banks, the next year in 2018, bought more gold as a group as they did in the previous 60 years combined. And then the next year, 2019, 100% more gold. Massive gold buying spree, repatriating their gold. Repatriating, let's remember that. Repatriating, buying spree, and then somehow, coincidentally, shockingly, the BIS said, oh, by the way, everyone, gold is now a Tier 1 asset. BIS is part of Project M-Bridge, right? So the white paper says on the unit that it'll be 40% gold instead of, as Sergei Glaziev originally said in his thesis, that it would be a basket of commodities. Right. Now, I think they decided that multiple commodities becomes too challenging to balance, and the shipping costs and all of the problems associated with commodities, gold being the only other Tier 1 asset in the world that all of the central banks have been massively buying, right, makes more sense. Right. 60% a basket of local currencies. Right. So here's the kicker, right? We see all of these countries repatriating their gold. We see the central banks buying more than any time ever in central bank history, ever, in over 100 years, continuously. Biggest first quarter purchasing by central banks ever, 2024 quarter one, only surpassing 2023 quarter one as the previously biggest quarter ever by central banks, first quarter. You can see the trend. Buy, bring it home. Buy, bring it home. No counterparty risk. So in the white paper, it says that 40% gold and the 60% local currency will be created by all of the countries who adhere to the unit. The gold will be held within the borders of each country's sovereignty. So they don't have to send it to Shanghai and leave it there. They don't have to send it to Moscow. Each country
in their own borders,
in their own borders, will hold their own gold. They will be put into an escrow account along with the currency, the 60% currency basket held in an escrow account, really, really, really viciously audited, independently audited by independent auditors, and very steep violations for not adhering to the protocol. So what it allows these countries to do is not send their gold off to someone else. And do you see the reason maybe why they're repatriating all their gold? Because this new unit, which will be traded on Project M-Bridge, which is backed by the BIS, who classified gold as Tier 1, this is the exact same thing that they did in 2017. Tell all the banks to buy the gold, repatriate it, and then, hey, surprise, it's Tier 1. Now they're telling everyone, buy more, bring it home, because surprise, you're all going to trade this new settlement currency, which will be 40% gold backed, 60% gold backed, or 60% currency backed to the BRICS units, but you can hold it in your own jurisdiction.
Let's talk about something truly groundbreaking. Project M-Bridge. This cross-border digital payment system has been a topic of discussion for over a year, and it's poised to revolutionize how countries trade their local currencies. Imagine a world where international transactions bypass the traditional SWIFT system, enabling countries to trade without the oversight or restrictions typically imposed by the dominant financial networks. This isn't just theoretical. It's happening with the backing of the Bank for International Settlements, BIS, and countries like China, Hong Kong, Thailand, and the United Arab Emirates. Now, why is this so significant? For starters, Project M Bridge aims to create a payment system that prohibits a single country from imposing sanctions unilaterally, as has been the case with the US dollar. This marks a seismic shift in global financial power dynamics. According to the BIS white paper, this new system will inhibit a unipolar set of sanctions, effectively decentralizing financial control. But let's dive deeper. At the heart of this system is a new settlement unit that will be 40% backed by gold. Yes, you heard that right. Gold, often dismissed as a relic of the past, is making a formidable comeback. This is not just speculation. It's a calculated move backed by historical precedents and strategic financial planning. To understand the full scope of this development, we need to rewind a bit to the actions of central banks around the world over the past decade. Back in 2017, we were coming out of a 6-year downward trend in the gold market. Around this time, the Bundesbank, Germany's central bank, demanded the return of its gold from the United States. Initially, the US was reluctant, but the pressure from Germany eventually led to a broader movement. Soon, other central banks followed suit. Austria, Hungary, Turkey, Poland, the Netherlands, all demanded the repatriation of their gold. This wasn't just about bringing gold home. It was about asserting financial sovereignty. By 2018, these banks collectively bought more gold than they had in the previous 60 years combined. The following year, in 2019, their gold purchases doubled again. This wasn't a coincidence. In 2017, the BIS declared gold a Tier 1 asset, on par with cash and U.S. treasuries. This move was a game changer, essentially upgrading gold's status in the global financial system. Fast forward to today, and we see the fruits of these strategic moves. The new settlement unit under Project M Bridge will consist of 40% gold and 60% a basket of local currencies. This approach addresses the logistical challenges of balancing multiple commodities and leverages the inherent value stability of gold. According to Sergei Glazyev's initial vision, the unit would have been backed by a basket of commodities, but the complexity of managing such a system led to the more streamlined and robust gold-backed approach. Here's the kicker. Each country participating in this system will hold its gold within its borders. The gold will be placed in escrow accounts, meticulously audited by independent auditors, ensuring transparency and adherence to protocol. This move minimizes counterparty risk and strengthens national financial security. The 60% currency basket held alongside the gold further diversifies and stabilizes the unit. The trend is clear. Central banks are not just repatriating gold. They are buying it at unprecedented rates. The first quarter of 2024 saw the highest central bank gold purchases ever recorded, surpassing even the previous record set in the first quarter of 2023. This isn't a temporary spike. It's a sustained strategic accumulation. The message is loud and clear. Gold is back as a cornerstone of financial stability. This brings us to the broader implications. Project M Bridge and the new settlement unit signify the beginning of the end for dollar hegemony. While the US dollar has long been the dominant global currency, this new system offers a viable alternative that reduces reliance on the dollar. Countries can trade using a stable, gold-backed currency, free from the political and economic constraints of the current system. Project M Bridge represents a bold step towards a multipolar financial world. By leveraging gold's historical stability and integrating modern digital payment systems, this initiative offers a robust alternative to the current financial order. For those of us invested in gold and silver, the future looks promising. Stay tuned as we continue to explore and analyze these transformative changes in the global financial landscape.
There were 200 meetings scheduled from January 1 of this year till the big meeting in October. And here we are, 3-4 months away from the big meeting in October in Russia, where lots will be announced. But there were 2 meetings recently, one in St. Petersburg, one in Novigrad, where a lot of developments came out. 3 things in particular really stick out to me. One, 59 countries have come out of the Novigrad meeting saying we're going to join, we're going to apply. And I don't know if that means they have already formally applied, but they said we are going to apply. 59. Now, we don't know which nations they are. They for whatever reason, keep this kind of close to the vest. And I like the way that they do things from a strategic standpoint. They tell us just enough, but not too much. 59 countries plan to join, but the real important things that came out of, I guess we could back up 1 second and say, before that happened, we had Saudi Arabia in June decide to not re-sign the exclusivity deal with the United States, the petrodollar deal, where some will tell you that they've had the ability to trade in other currencies for the last 50 years, but have chosen basically not to. Close to 95% of all oil sales since 1974 have settled in U.S. dollars. But they said we're not going to sign that exclusivity deal this time, and while we're not dumping the dollar, we can trade wherever we want. Now, they told the folks that at the World Bank meeting last year in Davos, and well, that certainly raised some eyebrows, but the actual act of not signing it was big. So we'll go to the Novigrad meeting just a couple weeks ago, which coincided with the G7 meeting in Italy. And the Crown Prince was invited to the G7 meeting, and he said, busy. Got other things going on, not going to make it. At the same time, he sent his financial delegates to finance ministers and delegates to the meeting in Novigrad. Big deal. Where information came out that I think is the beginning of the end, you could say, of the dollar hegemony, which you could argue has already been fractured, but maybe even the beginning of the end of the dollar supremacy. And I'm not saying it's going to happen overnight, but basically what happened was there are 3 people that had a meeting. Putin, Sergei Glaziev, who is the architect of really the common currency unit, the common settlement currency. He's the one for the last 3 years who's been telling the world that there will be a basket of commodities and a basket of currencies of the local BRICS countries that will comprise this new settlement unit. And Dilma Rousseff. Dilma Rousseff used to be the president of Brazil, and she is now the president of the BRICS New Development Bank. Big position, very influential woman. The meeting, upon its conclusion, Dilma said, we have agreed in principle to Sergei Glaziev's plan of a new settlement unit called the Unit. And it will be traded over Project M-Bridge. Now, let's start with Project M-Bridge.
As we approach the big meeting in October, the anticipation is palpable. This gathering in Russia will likely set the tone for the future of global finance. The announcements made during this meeting could solidify the framework for the new settlement unit and provide clarity on the roles of participating countries. The decisions made here will likely influence global financial policies and strategies for years to come. The significance of this meeting cannot be overstated. With 59 countries expressing their intention to join the new settlement system, we are on the cusp of a new financial era. The developments coming out of recent meetings in St. Petersburg and Novigrad indicate strong momentum. Strategic decisions made at these meetings are setting the stage for a more diversified and resilient global financial system. The October meeting will be a critical moment where theory meets practice, and the world will be watching closely. This pivotal meeting represents a convergence of many moving parts in the global financial system. For months, there have been extensive discussions, negotiations, and behind-the-scenes maneuvers. Each participating country has been preparing for this moment by aligning its financial policies, repatriating gold, and establishing the necessary legal and infrastructural frameworks to support the new settlement unit. The meticulous groundwork laid by these nations underscores the importance and potential impact of the October meeting. During the October meeting, we expect detailed discussions on the final structure of the new settlement unit, the integration of gold and currency audits, and the implementation of stringent compliance measures. These discussions will also likely cover the technological aspects of the digital payment system, ensuring that it is secure, efficient, and capable of handling large volumes of cross-border transactions. Additionally, the meeting will address the governance framework, outlining the roles and responsibilities of each participating nation and establishing protocols for conflict resolution and collaboration. The outcome of this meeting could also have profound implications for global trade and economic alliances. Countries that are currently on the fence about joining the new settlement system will be closely observing the proceedings and decisions. The establishment of a robust, transparent, and reliable financial system could attract more nations to participate, further strengthening the network and enhancing its credibility. Moreover, the October meeting is expected to address broader geopolitical and economic issues. Topics such as the impact of the new settlement system on existing international financial institutions, the potential shift in global economic power dynamics, and the strategies for managing potential resistance from nations heavily invested in the current system will be on the agenda. The meeting will not only be a financial summit, but also a platform for discussing the future direction of global economic policy. The world's financial media will be closely covering the events of the October meeting, with analysts and experts providing real-time commentary and analysis. This media coverage will further amplify the significance of the meeting, drawing attention from investors, policymakers, and the general public. The stakes are high, and the decisions made during this gathering will reverberate across the globe, influencing markets and shaping economic policies. In conclusion, the October meeting is more than just a scheduled event. It is a turning point in the history of global finance. The discussions and decisions made during this gathering will set the stage for a new era of financial cooperation and innovation. As we look forward to the outcomes of this critical meeting, it is clear that the world is on the brink of significant change. The establishment of a gold-backed settlement unit and the implementation of Project Bridge could redefine the future of international trade and finance, heralding a new era of stability and collaboration. If you've been following the trends in global finance, you know we're on the brink of monumental change. Project Bridge is not just another payment system, it's a paradigm shift. The central bank's gold-buying spree, the strategic repatriation of gold, and the move away from the US dollar signify a new era. For investors and enthusiasts alike, this is a time of opportunity and caution. Understanding the dynamics of Project Bridge and the role of gold and silver in this new financial landscape is crucial. Stay informed, diversify your investments, and be prepared for the shifts ahead. As always, we'll be here to guide you through these changes, offering insights and strategies to navigate this evolving landscape. In conclusion, Project Bridge represents a bold step towards a multipolar financial world. By leveraging gold's historical stability and integrating modern digital payment systems, this initiative offers a robust alternative to the current financial order. For those of us invested in gold and silver, the future looks promising. Stay tuned as we continue to explore and analyze these transformative changes in the global financial landscape. To all our viewers, remember that the world of finance is constantly evolving. Staying informed and adaptable is key to navigating these changes successfully. As we move into this new era, let's embrace the opportunities and challenges that come with it. Stay informed, stay invested, and let's embrace the future together. Thank you for joining us, and as always, keep your eyes on the horizon and your investments grounded in the wisdom of the ages. Gold and silver have stood the test of time, and as we move forward into this new era of financial innovation, they will continue to be pillars of stability and value. Let's navigate this journey together with knowledge, strategy, and a keen eye on the future.
Stay informed about the latest developments shaping the precious metals market with regular updates from the Finance Daily team. Not only that, but as a subscriber, you'll also receive timely silver and gold price notifications and early access to groundbreaking news unavailable to the general public. Join our free gold and silver newsletter today. Link in the description.